Namaste to all the viewers and welcome to my channel, The Outlier 73. Well, today's video will be on the major changes in the new ITR forms, that is assessment year 22-23. Well, the earlier video had one of the change been discussed. Today, we will be discussing 5 changes, major changes in the new ITR form. To begin with, the first change is in the disclosure of the dividend. Earlier, there was a disclosure of a dividend, and now from this new ITR form, there is a segregation of dividend, and the dividend under section 222E has to be separately disclosed. Well, what is this 2 subsection 22E? Dividend under section 2 subsection 22E is any company, if it gives any loan or advance to the shareholder who is a beneficial owner of 10% or more of the equity shares of the company, or to a concern in which the shareholder has substantial interest, then it is deemed to be the dividend to the extent such loan or advance is deemed to be the dividend to the extent of accumulated profit. Of course, the capital profit is excluded. New ITR form requires the reporting or the declaration of such dividend separately. Moving on to the next change, that is the new tax regime, or rather an alternate tax regime under 115 BAC. Well, there's a question as to whether you have opted for new tax regime under section 115 BAC and filed form 10IE in the assessment year 21-22. That is the last year. If it is no, then there is no issue. And if it is yes, then there is a further questions which requires to be answered this year. That is whether opting in now. If you're opting it now, then it has to be ticked. The first option has to be ticked. And if it is not being opted, then the second option. And if you're continuing to be opted, in case you have opted in the earlier year, and if you prefer to opt it or continue to opt it now, then the third option has to be selected. And the last one is opt out. If you have opted in the earlier assessment year, and if you want to come out of this alternate tax regime or the new tax regime under section 115 BAC, then the last option has to be selected. Major part of the changes are covered in ITR 3 and 4. Now moving on to the next, that is the third change, that is regarding the presumptive taxation, the declaration under presumptive taxation. Well, as you all know, the tax audit is applicable if the turnover or the gross turnover from the business exceeds 1 crore. However, if the cash receipts or the cash payment is below 5%, then the limit has been increased to 10 crores. That is the tax audit limit. Well, in the earlier returns, the 5% cash receipts or the payments did not include the checks or the DD, which is not account payee. Well, now in this new return, this 5% limit includes 5% cash receipts, or the payment will include such non-account payee check or non-account payee DD. Any check issued or DD issued which is not account payee will be deemed to be the cash receipts or the payment, and it has to be included in that 5% limit. So this disclosure has to be given in the new ITR form. Moving on to the next change. Well, earlier in the earlier return in the category of employment, if any person is receiving a pension, he was supposed to select the category as pensioners under the employment drop down. Of course, now this pensioner is further segregated into 4 categories. That is pensioners as being sent from central government, pensioners being from the state government, and pensioners others, and pensioners PSU. This pensioners has been segregated into 4 categories, and specifically it has to be selected as applicable. Moving on to the disclosure under capital gain. Capital gain arising from the transfer of immovable property, be it land or the any of the property, disclosure has to be given, additional disclosure has to be given as to date of purchase of such property and date of sale of such property has to be specifically mentioned. Probably this will be helpful for the tax authority or the officials in order to check the eligibility or the allowability of certain exemptions under section 54 or 54 EC or 54F. Moving on to the 5th change of today's discussion, it is regarding the residential status. As you all know, though the residential status is a basic pillar of this tax law, it still seems to be a very tedious task. So, and the new tax regime brings it in a form of a questionnaire in the written, which is self-explanatory for the assessees. They will have to choose a particular option relevant to them, which will support their residential status. And this segregation is brought about in resident and resident, but not ordinarily resident. Thank you, friends, for watching this video till the end. I kindly request you to subscribe to this channel and also share this video among your friends.